Hey guys, so as we wrap up another month of investing, I like to look back at my portfolio and see how I perform when it comes to dividends. So in this video, we're going to go over the companies that paid me a dividend, how much I made altogether for the month, how that compares to the past, and what my outlook is for the future, including what my future dividend income potential could be. But of course, before we get started, how did your portfolio do for you when it comes to dividend income? Make sure you leave a comment below. So first we'll start with all the companies that paid me a dividend for the month of September. Starting with Kroger, they paid me 82 cents, followed by ExxonMobil paid me $2.54, then Microsoft paid me $1.16, Realty Income paid me $4.24, Stag Industrial paid me 73 cents, Hershey paid me $4.59, Main Street Capital paid me $1.58, McDonald's paid me $2.93, Home Depot paid me $2.34, iShares Semiconductor ETF paid me $2.40, Main Street Capital paid me $1.87, that's the second one for the month, Broadcom paid me $1.61, and I ended off the month with a dividend check from Digital Realty Trust for $1.27. So those 13 checks put me at a monthly total of $28.08, which puts me at a running annual total of $294.10 with an average monthly payout so far of $32.68. So as someone with a low budget, specifically only investing $30 a week, one of the things I really like to do is to compare the numbers that I've made for whatever month I'm talking about to the previous year, something that motivates me to continue to go even though I'm only investing a small amount. So this is what these numbers for this month look like in comparison to last year. So when I do a month-to-month comparison, I actually made 95 cents less this September than last September. But for the first 9 months of this year, I'm actually making $51.98 more than the first 9 months of last year. And my running average so far for the first 9 months of this year is $5.07 more than last year. Seeing that September of this year didn't pay me as much as September of last year was a little disappointing immediately looking at it, but I wasn't surprised, and I'll get into that towards the end of this video. But another thing that I really like to do as far as a motivational tactic is seeing what my potential is for the future. So specifically, I want to see what my potential is for dividend income for the next 5, 10 to 20 years, assuming that I continue to invest $30 a week and assuming the annual growth that my portfolio has currently had, which is currently about 9%, a little over that. So with that being said, if I continue to invest $30 a week for the next 5 years, my portfolio would start paying me $631 per year in dividends. If I continue for 10 years, my portfolio would start paying me $1,070. And in 20 years from now, my portfolio would start generating me an income of $2,546 per year, all in dividends. So it's really cool to see that I can potentially be making over $2,500 per year in dividends if I just continue to invest $30 a week into this particular portfolio for the next 20 years. But I know at one point it could have been a little bit higher. And that goes back to noticing that my September income wasn't the same, or it was actually lower than it was last year, and that's because of a lot of changes I made, selling off a lot of high yielding positions and buying more into low yielding positions, but have a better history of dividend and share price growth. So with that, I'm not really surprised of that outcome. It's just interesting to see it so early. But again, the goal I have now is to take advantage of me being a lot younger and not being as concerned or as needing of an extra source of income, at least in the form of dividends. I'm still going to invest in pretty much all dividend stocks when it comes to my Robinhood portfolio, but I'm going to focus more on dividend stocks that have a bigger history of share price growth. So those companies may reinvest more of their free cash flow into themselves as opposed to paying out in dividends. And hopefully my yield on cost in the long term continues to go up. But we're just gonna have to wait and see. And this may be something you guys have noticed, but I've noticed that with this shift in mindset when it comes to how I want my portfolio to look like as opposed to what it used to look like, I find myself kind of battling between certain positions on what I should invest into. And one of the bigger positions was actually between ETFs, meaning SCHD and VIG. And one of the things that was really important to me is what my returns on dividends and share price growth could be with just investing a small amount, like $30 a week. And I actually make a video where I break those down. It's kind of a special versus version of Diamond Dividends. So if you have some time, make sure you check that out. And I do appreciate you guys watching this monthly update. And until next time, as always, take care.